What's up, everybody? It is Tuesday, March 4th, and welcome back to the Daily Rip Live. We are here, of course, with Shay Boloor and Robert Croak, who is one half of a business podcast that's just ripping lately. Every time I see you guys climbing up the charts, so look out Joe Rogan, look out Kylie Kelsey, everyone's on watch. We have a lot of things we're going to get into today. But guys, how you feeling this morning? I know yesterday was a little shaky. Start with you, Robert. How you feeling generally?
I feel great. I think most of my days are filled right now with kind of quelling the fear and letting everyone kind of coaching everyone through, when in doubt, zoom out. This is pretty normal. The markets are overreacting because of all the fear and uncertainty with the tariffs and everything that we're going to break down today. But I think it's business as usual. There's a lot of opportunities right now that people can be focusing on rather than focusing on panic. And, I think this will be short lived, just like always when we have these kind of reactionary situations due to, uncertainty because people don't understand what's going on, with Trump and the federal government.
Yeah. Shy, how about are you equally zen? Are you chilled? I know you're on the West Coast. You feeling chill over there, or
I mean,
a little more fired up?
as a long-term investor, this is kind of the environment you want to be in. Like I didn't buy anything from November to January. Like 3 months, I did nothing on ads because things were just extended up to the right, and there's always that fear in the back of my head. If we had another 20% a year in the market, that's bubble territory, 3 straight years, and it would just be too much too quick. So we needed this gut check. I'm really happy we had this gut check, and the reason I'm even more happy about it, it isn't anything structurally wrong with the economy that's causing it. It's a high stakes poker game that can go away at a flip of a switch. And I think that's really important to know. That's what's driving this pullback. It's not unemployment skyrocketing. It's not growth is tanking, but that's just because businesses are front running the potential tariffs. It can easily offset it once the high stakes poker game's over with. So like I think it's really important to know this is a fleeing moment, a chess move, a power play. It's can easily go the other way once a deal is made, and that's really important to know when you make these ads. And that's why I'm not adding to my speculative positions right now. I'm adding to my high conviction winners the past 2 years because those opportunities don't come every year. They come from a macro driven pullback, and those only happen like once, maybe twice a year. So you capitalize on that. So I'm stoked. Cash position went from 12% 2 weeks ago to now it's 6 or 7%, and I'm going to be nibbling for near term and as long as we have this pullback.
All right, deploy. I mean, let's start with the tariffs because we got 25% coming up on Mexico and Canada. Slapped another 10% on Chinese goods. That's 20%. China hits back with their own 10 to 15% retaliatory levies on agriculture. Markets didn't like it. Robert, I know you have some thoughts here. There's obviously everyone's talking about this. What aren't people getting? Like, what do you think when you look online, where you're like, oh man, people are just missing this completely?
Well, let's go to the root of it. I believe this was, like discussed, a big poker move, kind of a real bluff where he is using this imbalance of trade tariffs to his advantage to get everyone on board and get the reciprocity so both sides of the fence are more equal. I think it's a smart move, but as they say in the markets, sometimes you have to break things before you fix them. So I think that is a lot of what's happening is this big fear of the unknown, because most people just hear tariffs and they don't even understand what a tariff is, what it does, and how it affects the US markets. So let's go to the numbers first. Right now, if you were to take 2024, the total tariff revenue for the United States was $77 billion. Not a very big number, and it only made up 1.5% of the total revenue the federal government took in 2024. So even with these additional tariffs of China going from 10% to 20% and Canada going up to 25%, all of this would not even break a sweat to move the needle for the federal government to offset what the ultimate goal was that was announced, was to get rid of income tax. It just doesn't work. The numbers just won't add up, and it won't make up enough difference. But I don't think the tariffs were brought into play just for that use. You know, with China, you know, there's been a lot of talks that he really wants to punish China because of all the fentanyl and other illicit drugs that are coming into the country. So I think all of this is important to understand so people can relax, USA a little bit, and not have such knee-jerk reactions, because we have to look at it this way. For every 5% a tariff is raised on US companies, because remember, the companies in the US are paying the tariff, not the Chinese factories. So that's where people get it wrong a lot. In most cases, probably over 95% of cases, the US company that is the importer of record of the goods is paying the tariff. So keep that in mind. But for every 5% that you would raise the tariffs on a country, any S&P 500 company would have reduced earnings per share of 1 to 2%. So that's important for people to understand. 1 to 2%, let's say it's 4% on a 10% tariff hike, would not make up enough in reality to crash an entire market. So keep that in mind, because there can be some balance. There's going to be a lot of negotiations where these big US companies are going to say, hey, the tariff went up 10%. In the interim, can you take 5 of it and I'll take 5 of it? And then there's not this big hurdle to overcome for the US companies. So first and foremost, I wanted to clarify the real numbers, but also helping people understand, because what I think people think is going to happen is that if China is raised from 10% to 20%, all of a sudden there's going to be a 20% hike because that's what the headline says. Well, the tariff increase proposed is only 10%. So assuming that the Chinese factories agree to take 5% of that and bite the bullet, and US factories take 5%, there might be a price increase to consumers, but it's not going to be 10 or 20% right out of the gate.
Quick follow-up to that. When you talk about, it's interesting, I've never heard of that plated that way, the negotiation between the Chinese factory and the US counterpart.
Yep.
How does that go? Is that always the case? They're like, let's go halvesies? Or is it sometimes the case where they're like, let's just dump it all on the end customer? Like how does that come about?
That's a great question. Look at it this way. If you're the Chinese manufacturer and you're making $100 million of goods for XYZ company, and all of a sudden the tariff changes from 10 to 20%, do you think that they're going to just turn their nose to it and say, screw America, and not try to participate and help? It wouldn't make sense, because then they could lose said client. Now, do they generally go halvesies? Not necessarily, but you might be in some instances. Let's say you're the third largest client for a $500 million a year Chinese manufacturer. Do you think they're just going to dump it all on you and look the other way? They can't afford to lose you. So I think the main takeaway for me on tariffs is it is a bluff. It's a bargaining chip to get everyone on board so Trump can get what he wants out of this. And I think there will be some backlash in the United States. We're already seeing a 3% increase on lumber prices. And that is in the first few weeks of this tariff being announced, because most of our lumber, a lot of our lumber comes from Canada. So I think we will see these price increases, but the price increases in the next few months, I don't believe will be as great as the fear and the reaction to the market has shown.
Yeah. Shay, I know yesterday we were talking about everything being a theater. Are you with Robert? Is this all kind of a long game, a bluff? What's your reaction to all this?
I mean, I think first up, I thought the bark was gonna be louder than the bite. I didn't think it was gonna actually get installed this quickly, and it did. So I think the market's also recalibrating the reality of the situation where it's actually happening right now. So I think that's part A. Part B is short-term gain, short-term pain for long-term gain. I think that's a TLDR of exactly what's been said right now. And I think it's also matching the ethos of a lot of the big tech companies this year. This most recent earnings cycle, across the board, CapEx is increasing, AI-related investments are increasing. The reacceleration on the top line isn't matching the expenses that's increasing. So they're treating this year as an investment cycle year of, let's just get as many AI tools as possible so we're no longer compute constraints on our AI workloads in our cloud. Google, Microsoft, Amazon, they all had that same kind of narrative. And I think, I don't know if there's a group chat involved with Trump or whatnot, but like there's some kind of aligning of expectations for this year that this won't be a great year for the market, maybe, or maybe Trump's going to do create a lot of noise that's going to prevent any, it's going to be an anchor in any kind of rally in the market, or any kind of over expectation or delivery on on our performance like won't matter much because this macro narrative will take control. So let's just treat this year as not a dead year, but like it just won't, it's going to be a range bound year at best. And we're just going to invest in all the tools we need long term. So like, I think that's that's what's currently happening right now, in my opinion. And I think a lot of investors need to now come up. It's every year's a new chapter. It's not going to be like the past 2 years. This year's going to be very specific to stock picking, specific sectors of the market. Like we're going to talk about in a couple minutes, like which sectors are going to be the next hotspots and what we're bullish on. But it's not going to be big tech. It's not going to be semiconductors this year, and that's fine. They need to be range bound. And if they aren't, if we didn't have this kind of year, 2022 would be an absolute reality for 2026. And that's, I have a couple great streaks in my hair because of 2022. Like I can't afford any more, so I'm happy with our choppy year.
Let's get into the sectors. I think it is easy in the day-to-day to start chasing individual cash tags. And yes, we love to do that and follow them. But I know both of you are thematic guys. Start with you, Robert. General sectors, and then kick it over to you, Shay. What are the pockets of the market that you're really interested in right now, and why?
Well, I want to go back for a second on Shai's anecdote there towards the end. And that is that if we are going to become a manufacturing powerhouse again, like we once were, we have to break it to fix it. And right now, I think that is one of the big long-term plays, is how do we get more and more manufacturing back to the United States? It's already happening. Micron is building a huge plant in Boise, Idaho. We've got big plants happening all around the country, in Texas and so on and so forth. So I think the long-term move is great, but as Shay alluded to, the short term is it's going to be a building time frame, let's say 25 and 26, and you're going to have to really understand secular growth trends to be able to find your way in the market. And like I always say, is if you know where to look, you can always make money. And it's so important to understand that. And one of my big things that I try to tell my audience and anyone that'll listen is, you don't have to be first to a secular growth trend or a stock. You just have to be ahead of everybody else. Mm-hmm. And if you can be in that top 10% of people that understand the macular growth trends of where the markets are going, you're going to win. And so to lead into that, I would say I have 3 sectors that I'm very, very heavy in, and I believe will make me incredible gains still over the next, let's call it 3 to 5 years. So number one, I still believe AI is going to be a huge, huge leader. So I'm going to keep owning the NVIDIAs and the Microns and the Palantirs of the world, but I'm also going to be looking at big winners in the software side of AI, like Cloudflare, CrowdStrike, Snowflake, stuff like that. I think those are going to do really, really well in the next 18 months. Secondarily, I love nuclear because we are seeing this huge, huge resurgence in smaller nuclear reactors, not the stuff everyone was scared of back in the day, but these are going to be regionalized and localized nuclear reactors. And I think that is going to be a great sector. We've already seen a ton of growth in the last 18 months. And in that sector, I love Constellation Energy. I love Vistra Energy, and Nano Nuclear is a good one no one is talking about, as well as Talon Energy, TLN. I love those 3. And then I would say the last sector for me that is all the buzz, but I feel like Wall Street is lagging, and that would be humanoid robotics. You know, we still hear everyone talking about Tesla as a car company. They didn't hit earnings. They didn't do this. They didn't do that. People need to lose that moniker because Tesla is not a car company anymore, and they need to look at it of what they're doing in humanoid robotics. So for me, humanoid robotics, I think, will be big winners, not just for the manufacturers of the robots themselves, but the picks and shovels providers that are providing the servos and the motors and all the things that go into these humanoid robotics. So in humanoid robotics, I love Tesla. I love Figure AI. Apptronic is one of my favorites. They're not publicly traded yet, but I'm sure they will be in the next couple of years. So those are the three sectors that I'm really focusing on for the next, let's call it 3 to 5 years. But I also think, depending on what happens with the bill to take away the tax credits, I also think we're going to see some really strong growth in solar as well, because with all of this growth in manufacturing and warehousing in the United States, we're going to need a lot of additional power. And one of my favorites in the solar market is First Solar. They're from my hometowns, and that's not why. I just think they're a really strong company. So that's it for me. Those are the three sectors I'm most excited about. But of course, I'm always looking at growth stocks, consumer trends, and just some of the things where I can find these pockets of money to be able to pick and choose where to put my money.
Quick follow-up, and then want to hear Shai's take on all of that. The nuclear, is that like indicative of you sort of doubling down on AI? Because is the growth of nuclear, is it very closely tied to the energy needs that come with AI? Do you see those two as working together, or you view them separately?
Yeah, that's a great question. And I would say both. I think they work together and they're kind of harmonious, but also we have to look at all of the power needed for cryptocurrency as well. So when you think about mining facilities and all of that, they're very power absorbent. And so I look at it that I don't think we're not going to need the power. I read some crazy stats of how much power we need to be able to produce in the next 3 to 5 years in the United States for all of the growth. So if Trump's administration and all of this rhetoric around making America great again in manufacturing actually comes to fruition, even if 30% of it comes to fruition, then I think the nuclear energy in a bunch of these renewable energy sources like solar are going to be very critical to being able to actually pull off this manufacturing, this robust manufacturing future.
Awesome. Shay, I know yesterday you joked that one move was potentially just to follow what Eric Trump is doing, which seems like sketchy life advice generally, but these days maybe it works. Sector-wise, though, do you align with some of what Robert's saying? Do you have some of your own theses here you want to walk us through?
No, I'm going to add a ton of color to what Robert's saying because he nailed it. First off, regarding real quick, AI is an S-curve, guys, or semiconductors specifically. We're in the middle of that S-curve, and it's just an investment here. Who knows how long that cycle is going to be for that? So First Solar is the only name you should touch, in my opinion, in that sector because they don't have the residential risk, and all their contracts are industrial, and they're long-term contracts, so they're going to do just fine. But regarding the software thematic, so most of my portfolio is software, as you guys are aware. I am hyper bullish on this next stage of AI, which is applications. Like, if you guys remember, I know Robert remembered this, but like during the .com era, all the intention was to fixate on the infrastructure, the tangible systems that's laying the groundwork of the connectivity. So all the companies like the Cisco's, IBM's, AT&T, Verizon's, like they were spearheading this like digital awakening by building the cables, structural arteries of the internet, essential work for that whole thematic, but they weren't the crown jewels of that era. The crown jewels were the marketplaces that are built on top of the connectivity, the Amazons, the Googles. The same thing is going to occur during this revolution, or this fourth industrial revolution, where AI still is going to continue being the defining revolution of our time. There's going to be multiple derivatives that come from it. You're seeing it, like one of the themes that Robert was talking about was robotics. Like that's a physical AI derivative of AI. So the first wave obviously dominated in 2023, which was the infrastructure focused GPUs, compute system, hardware firms that became the backbones of they were laying the groundwork for AI's meteoric rise that's going to happen across decades. So the companies that fueled that engine of progress is the stage one names like the ASMLs, TSMs, NVIDIAs, Microns, like all these names did really well initially in the first stage. But like I said, it's an S curve. We're in that middle of the S curve, and that's going to be a range bound type of year. And it's a very cyclical sensitive space, and it might be range bound for years. Who knows? But All I know is the baton has been getting transferred from stage 1 to stage 2. The crown jewel of this era is going to be software applications. And
Yep.
you're already seeing the market reward those firms who validated themselves into permanence for that stage 2 of AI, because AI will be cannibalizing the software space. It is inevitable. It's going to consolidate it. Products can get duplicated. Like, you have to not just follow traditional metrics. You need to dig into the actual products and code. Can this get replicated? Is this have a defensible moat? Like, you need to add those additional layers of understanding the companies that you're investing in this space, because it will get cannibalized. So the second stage shifts the spotlight from infrastructure to applications, and this stage is where AI meets permanence. And that's why I'm so bullish on this next stage. And I front ran a lot of these moves, and I was way too early on a lot of them.
Me too.
2 years ago. Like, I just knew it was going to happen. I'd rather be first than last and catch FOMO. Luckily, I got a Palantir under $10, Cloudflare under $50, CrowdStrike at 100. But I also held Snowflake, MongoDB. I had a couple other software names that were just like opportunity cost killed me, but the balance was there. So either way, this next phase is something that is not going to be a trend. It's going to be a structural shift that's going to affect multiple industries for decades to come. And if you miss out on the key winners of this next stage, you're going to have absolute FOMO. I'm sorry to say it, because although it's going to get cannibalized, there's going to be 5 to 10 software names that come out of it with unprecedented pricing power, and they're going to become the next Mag 7, I always like to call them. You're seeing Palantir already with enterprise AI. You're seeing Tesla already with real-world AI through autonomy. You're seeing Cloudflare already cement themselves as the new gatekeepers of the new modern internet with Workers AI. I believe Snowflake is going through a re-rating right now, and you saw with back-to-back earnings reports of Gen AI flow hitting them. So, like, be cautious out there with the names that you want exposure in the second stage, but it's going to be explosive. And for nuclear, I agree, for AI to reach its maximum potential, it needs alternative energy. I just don't have the urgency to get into nuclear space, and that's my issue. Like, I just think right now it's software's time in the spotlight, and because of that, I want to kind of put all my chips in that side of the AI thematic. But hoping I want some nuclear exposure at the end. Kamiko is one of my favorite names in that space, but I just don't have the urgency yet, so that's why I don't really own any names right now.
Yeah, Shay, you've mentioned Mag 7 and new Mag 7. Something that neither of you mentioned was Google, Apple, Meta. How are those companies? You don't think those are going to be the AI winners in the long haul, or kind of what's the why did neither of you mention those companies in this conversation?
So,
Well, because
I'll let Robert answer first.
Yeah, I think those are givens. You know, my whole thesis for people is dollar cost average. Don't try to time the market. Don't sit on the sidelines. Every 2 weeks when you get your paycheck, or every month when you get your money, you should be dollar cost averaging. And to me, the Googles and the Metas and the Microsoft and Amazons of the world, those are givens. Everyone knows it. And if they don't have those in their portfolio, shame on them. I'm trying to give people today that are here listening some ideas to think a little bit forward looking, and not so much where the opportunity cost is lost, like Shay alluded to with nuclear, but to just understand where the markets are going so you can get ahead of the masses. So for me, those stocks are a given. I own all of them, and I think everyone should. But then there's also a lot of pockets where we can find really, really explosive growth. And the story that I tell relative to this question is, you know, when I called out Micron, let's call it Micron, AMD, and NVIDIA back in 21 or 22, everyone was like, okay, cool, AI is not going to be real. NVIDIA is just making chips for gamers, blah, blah, blah. And they were wrong, but I was ahead of it and made tremendous returns, which is great. And then as soon as NVIDIA started to top out, people were like, what's your next NVIDIA? And I had already been calling out Palantir at $7, $10, $14. And I'm like, guys, that's not how it works. There's not a new NVIDIA every week, because everyone just thinks that they can just hop around from stock to stock and make these 200-300% gains. And you can do it somewhat, but that's just not the way the markets work. There's not a new company. And a lot of times people think like, wow, where did this company come from? And they've been right in front of their eyes for years, but it's not in the headlines, so they're not watching. I think that's important to understand.
I mean, I think Cloudflare fits that. Nobody was really watching Cloudflare.
No.
And they're
No.
the leading software performer this year because they're just quietly building the new modern internets, like the new AWS of the agentic AI world. Like people just flying under the radar. Like that's a perfect
Yep.
example.
Because if they don't have a dynamic CEO or they don't have the right people on their marketing teams, these companies can fly under the radar for a very long time. When NVIDIA, Palantir, and the whole chip phenomenon was happening, I was touting Taiwan Semiconductor in 2022, 2023, and nobody even knew who they were. And I'm like, they make everything for all these companies. That's, so you just have to find those pockets. And I've really been telling people because Austin and I's big theme for 2025 has been volatility. It's going to happen. Here's why. We've really stayed on top of this for about 2 quarters now. And, it's funny because I'm just trying to get people to think deeper. Most people that we engage with, if they're not in the business, but they care about money, they're always reactive instead of being proactive and understanding what's really going on. And a lot of my content lately is breaking down all of these clickbaity headlines so people understand what's really happening.
Yeah, I mean, the amount of deep sea questions I've gone in the past couple of weeks is a perfect
Yeah.
example of that. And also,
Yeah.
I want to add another name. Axon Enterprises also fits the narrative, and it's flying under the radar. Nobody knows they have a monopoly in public safety, and the TAM is just expanding rapidly. So there's always opportunities out there. Keep in mind of that. It's not just the names you see on the headlines. There's a lot of under the hood that's like clear monsters just hiding in the cave.
Yep.
Monsters. I like that. I mean, I know we're a couple minutes away from the bell, so I feel like you guys were dropping some knowledge here. I love Robert. I always think of Talladega Nights, so that line where like if you're not first, you're last, and you're saying like that's BS. Be in the top 10%. But I'll kick it over to each of you. Final parting thoughts for the trading week for our listeners. Shay, I'll start with you. What do you want to leave people with?
Short term, it's gonna get ugly, guys. Long term, this is the opportunity that a lot of people have been waiting on for months, maybe even over, like maybe until since the election, people were waiting for these opportunities. So if you have a long-term investor and you have a heavy cash position, I'm slowly DCAing. But this morning I bought hedges because QQQ is breaking below the 21-week EMA. That's 496. There's no resistance. It looks like it's technically breaking down for a correction. So knowing that, I'm protecting my gains from the last 2 years, and that's fine. I can have a short-term hedge, but keep adding to my long-term positions. It doesn't have to be so binary. So protect yourselves. Don't get greedy. Don't over-leverage yourself. Live to trade another day.
I
How about
love
you,
it.
Robert?
So I'll piggyback off that with, when in doubt, zoom out. Stop looking at the daily headlines. Stop looking at the daily charts. They don't matter. Have a long-term thesis for your money and understand why you're investing in these different sectors, stocks, ETFs, or cryptos. Because a lot of people just kind of follow the herd and they don't even understand what their buy box is and why they're doing it. So understand that and think in years rather than weeks and months. That would be number 2. And then number 3, I would say is just relax, chill out, stop being fearful, stop being concerned, because you really have to look at these buying opportunities when the markets go down 10, 20, 30%. Is exactly that, a great opportunity to be on sale and get these things, these assets that we like at a sale price. So I would say relax, have a long-term thesis, and think deeper.
Love that. Well, thank you so much, Robert, for joining us. Everyone check out the Rich Habits Pod. Austin's a great dude. We love Austin here on this show. Love having you, Robert.
Thank
really
you.
appreciate the time this morning, and we'll talk to you soon.
No worries. Thank you guys for having me.
All right. Well, we are moments away, and Russ is coming in. Hello, Russ Starr. Welcome back to the show. How are you doing today?
It's always a fun ride. Trump, never a dull moment. Always having fun.
Oh, and
Here we go.
There's the bell. That's also your walk-up music. So you get both of those.
I'm dressed for it too.
Well, we just met, so this is day 2 for me on this show. I know you're a regular, so it's great to. I don't know why that's happening. That's
because you said I'm a regular. I don't know. It's one of those.
It's nobody's birthday today, but that's okay. So, Russ, real quick, tell us a little bit about yourself, and then I know we have a lot to get into because a lot's happening in the crypto markets.
Yeah, so ironically, especially with your previous conversation, master's degree in econometrics, started my PhD in econometrics, have an MBA as well, spent 15 years on Bay Street and Wall Street, built a pretty big firm here in Canada, but ultimately just chose to try to become more of an entrepreneur, build companies, join what I think are seminal trends in the market. You guys referenced one of them, which was nuclear. I would like to preface that everyone who is seemingly buying all of these SMRs and nuclear companies has casually forgotten that there's no fuel for any of them. And so if you're looking at nuclear, you'd better be looking up at Canada for actual uranium production. But yeah, so I joined a crypto company. It's called DeFi Technologies. I was really kind of a gold bug more than anything. But my headline on X is, I believe in a world where gold and crypto can live symbiotically. Lucky for me, my gold stocks have kind of done nothing, and my crypto stocks have basically gone like this. And DeFi, which is really more or less just a crypto ETF company, it's the biggest crypto ETF company in the world. That is really under the radar. We're only trading at 7 times last year's earnings, 2 times this year's earnings, and you look at Coin and Hood trading at 40 times, 50 times. We're making an uplist to the NASDAQ and just managed to meet these guys and of course yourself, and think this will be a really fun conversation.
Yeah.
So that's everything and anything about me other than I love sweatsuits. So
Okay, same.
yeah.
I'm curious. I did see your Twitter headline, and you're the only person I know that's in that Venn diagram of gold guy and crypto guy. Like, how many are there of you? Do you have a group chat? Like, how?
No.
Are there a lot
group
of
chat of
people that
one.
are like you?
So it's a group chat of one. Usually what you find is either the crypto native hates gold or the gold native hates crypto. And no one really ostensibly understands that they effectively do the same thing. And why be antagonistic? There's really no need or no reason to be antagonistic. You're seeing China, Russia, and even the United States buy tremendous amounts of gold right now. You are seeing crypto sell off. I think perversely the world still thinks of it as a risk asset when in reality Bitcoin truly is digital gold, and it should be trading more in line with gold, in my opinion. But the market is always right and I can be wrong a lot longer than the market can be, and go bankrupt. But ultimately, I think you're going to see people starting to recognize that despite all of these headlines, despite all of this trade war garbage, really is what I call it, you should be accumulating Bitcoin. You should be accumulating, especially anything that's going into the strategic reserve. We're actually going to launch a product, an ETP product. It's basically an ETF that is the strategic reserve basket. I think it was Eric Trump who came out and basically said, just buy and hold. I'm not sure I buy in too much to Trump's sons. I'm not really sure how much or what they've done other than being the children of now the most powerful man in the world. But it was a pretty astute comment, which is and follows really the thought process of the previous commentary. Find market darlings, find interesting opportunities. Forget about all of the nuances and all of the language going on around you, and actually look for value and just continue to invest in value.
Yeah, it's so interesting. I randomly was talking to a Canadian gold mining CEO like 2 weeks ago, and he was telling me all about how people are buying up gold, and we were getting into like why, okay, if Bitcoin is supposedly digital gold, why is that not aligning? And I think a lot of that netted out in his view too, just people's perception and behaviors towards it are not the same. So they're not, it can act that way, but that's not how people are utilizing it. That makes it more speculative, even though at its core, if you're a believer that Bitcoin is digital gold, it should align. Is that Is that a good way to think about it, or how do you think about those two things right now? Why are they misaligned?
Well, you have to remember that effectively the vast majority of the world's portfolios are long 7 stocks. The gold sector, which if you look at the gold price, the gold sector is actually at all-time lows. In fact, the junior gold sector has never ever been cheaper, and so you have basically this machine, which is, call it MAGA, call it, the Magnificent Seven, whatever you want to call it, where everybody thinks that's where you need to be, trading at what I would call valuations that in many respects are unsustainable. And then you actually have, and you could use nuclear as the same thing. Everybody's going nuts for these SMRs, but no one understands that you should actually be buying the companies that make the uranium, the Canacos, the Denisons, the Juniors. Similarly, in the gold space, you've had actually no move whatsoever in small and mid cap golds, only in the large caps. And so there really are incredible trading opportunities out there. But getting into the psychology of what people are doing and why they are doing it, I think you're looking more at a herd mentality of just a bunch of people following one or two people. I think you're also looking at what I would argue to be the complete elimination and disappearance of sort of the Warren Buffett school of investing, which is invest in value, and you just have traders, and whether it's people who took their COVID checks and bought Doge and retired because Elon Musk said Doge was amazing. Everybody thinks that that's their next move, their next model, and that this is something that can be easily done, when in reality, the vast majority of people are probably going bankrupt using that sort of a thematic approach to investing. So really, truly, I call Canada the land of misfit toys now. Like we actually, our regulator hates crypto more than Gensler's SEC hates crypto. And it just makes no sense. You've got the entire world moving towards crypto, and then you've got a Canadian regulatory body, a Canadian enforcement bureau that will do anything and everything to eliminate someone trying to launch a crypto company in Canada. You've got the US changing almost diametrically. And then one thing that I think everybody needs to remember, and you can call them the bad guys, the good guys, whatever you want, but the citadels of the world, in my opinion, control the markets. They are the market maker. It's largely algos which control price movements now. If you were to look at the share price of DeFi, we have 2 or 3 what I would call predatory hedge funds in Canada who are likely going to be in a lot of trouble here shortly, just because it's pretty much proven that they were colluding with Hindenburg and Andrew Left, and all of these lawsuits are going on. But they managed to get market maker designations. And then you've got Citadel, and like in my world, I'm lucky if I make money 55% of the time in the market. Like really, your goal should be to make money 51, 52, and if you get lucky, 70, 80%. But when you have a firm that makes money every day, no matter what, and the CEO is getting paid 382 or whatever that vast amount of money was, because they've never lost money, or they lost money one day of the year, probably something dubious is going on. So market makers, algos have really ruined a lot of the investment sort of thesis. But you still have a chance to find these gems, and DeFi is one of them. I mean, obviously, I'm the converted, but if I can buy something at 7 times last year's earnings and 2 times this year's earnings, I'm not going to worry about what happens today, especially when we're pursuing a NASDAQ uplist. And typically, when you get that NASDAQ uplist, you get 300, 400, 500% return just from a Canadian company doing that.
Yeah, quick on the uplist. Is there a time frame on that, or what are the sort of milestones that need to happen before that comes about?
So it's a really weird world in the US. You're not the SEC actually hates you talking about stuff like this. It's almost illegal. What I can say is we're in communication with the SEC. We're doing everything we need to do. We filed our 40F. They have a response. We'll respond. But in terms of like an actual timeline, it's a weird world because you still don't have Hester Pierce or Paul being actually sworn in. You still have, in my opinion, most of the, I call them Genslerites, but I mean, anybody, just Gensler SEC folks who are trained to hate crypto. So until you actually have a cleansing, and I think I was reading an article, the last time there was a regime change, the SEC commissioner wasn't sworn in until the end of March. So I think that's probably a similar timeline. And then you likely see a wholesale change. I guess the wild card in that is typically the way Gensler looked at the world was Bitcoin's a security, so no, you can't uplist. And then it was Ethereum's a security, no, you can't uplist. Then it was Solana's a security, nope, you can't uplist. Now you have Trump basically going loudspeaker over the weekend saying Solana, basically all of these protocols are going to be theoretically commodities under the purview of the CFTC. So really, what is the hindrance towards an uplist? I don't know what it would be. And if you truly do want to be dominating and restoring faith in the crypto sector, and you've lost, like they've lost the U.S. has lost a decade of innovation in the crypto sector. If you want to catch up, you're going to have to start rushing these uplists, in my opinion. So we'll see what happens. Can't really tell you the end result, but it's going to be interesting.
Let's talk about the reserve. Can you mention I want to talk about the ETP product that sounds like it's in development coming soon.
Yep.
To align with the reserve. There were some conversations about using the word reserve versus stockpile. Do you think they're going to be actively like flipping in and out of positions within that grouping that they announced, or do you think those are the five? I think it's five that they're going to like hold on to.
Look, if it was me, Bitcoin would be the seminal position that you would build around. And it looks like what Trump is doing is effectively saying any of these protocols that are created and largely domiciled in the US, we want to be part of that strategic reserve because we want to continue to propagate innovation. And these are protocols that are being innovated and driven through the United States. So theoretically, I think that could grow because I looked at a list. There was a big Venn diagram of 10 or 15 different protocols. It's just that not all of them have become mainstream protocols. So I think XRP, Solana, Cardano are givens. I think Bitcoin and Ethereum are givens. It shocks me that you had, like, it just goes to show again the algorithmic way of what's going on in the market. I don't see how a trade war, now I should be careful, like from an economic perspective, the last time there was a trade war, basically a recession ensued. I do agree with the previous speaker that this is more of a power play, some political posturing. I do wonder why Canada is getting 25%. One of the things you guys didn't talk about, sorry, I'm getting way off topic here.
No, let's go. These are the best parts.
Trump voters, in my opinion, are largely beer drinkers, and most people don't understand that aluminum goes through the Canadian border about 4 or 5 times. We are the largest producer of aluminum and steel for the United States, and so every car that you guys buy is going to go up by $5,000 to $8,000, and every can of beer is going to go up by 30 to 50 cents. So I wonder how the voters are going to feel about that when they start going in and picking up their 2-4 of whatever, and they're paying an extra $5, $10, $15, whatever it turns out to be. Yeah, I don't theoretically understand, other than if you're looking at it from an algorithmic perspective, which is you get the Citadel of the world who has already remarked they're getting into crypto. They're going to be a market maker in crypto. To me, that's. Do
you think they're too late?
No, I don't think. I think Citadel is. probably the most powerful, probably the most powerful financial company in the world. A lot of people would look at the Goldman Sachs, the JP Morgans, but I don't even think on a good day JP Morgan can say they've made money every single day almost of the entire time they've been in existence. Look, we run our own market making book ourselves. It is a very profitable avenue for us. We make almost 50 basis points per trade on millions of dollars of trading every day that people don't factor into our valuation. There is room for many market makers. 98% of the world hasn't invested in crypto institutionally or retail. So if you actually think of 50% of the world going into it, there's a lot of room even for a Citadel. The only problem is that Citadel just, I mean, everybody's probably read the Michael Lewis book, Flash Boys. They just tend to front run everybody, right? So you effectively have the biggest, in my opinion, most powerful company in the world that's going to step in and front run everybody and just make millions and millions and millions of dollars. And eventually, as the institutionalization of crypto occurs, those spreads will shrink, the yields will shrink. But we're probably a decade away from that, right? Like if you look at crypto as a proxy for what happened with the internet, and that's the only thing I can really, I mean, it's kind of like the steam engine if you think about it that way. How many years do you have of surreal gains and opportunities of a sector that truly will it's going to revolutionize the entire financial ecosystem globally? So do you want to actually be long? I always use the example of Amazon. Like whoever wanted to invest in a company, you know, a guy who's running a business out of his dad's garage, shipping stuff out of boxes. Like, well, look at where it is now. So that's the Cardanos of the world. That's the Solanas of the world. Do you actually want to be early on, or do you want to catch the last 10%? I'd rather be early on.
Yeah, and then so the ETP with the reserve. One thing I didn't see, I mean, it's early announcement, right? It seemed like it was a little all over the place because they announced the smaller ones and they're like, oh yeah, by the way, Bitcoin, Ethereum also. But is there any indication of like the allocation towards each of those, or how will you all think about allocation within the ETP? Would you think that'll eventually be made public? What is the weight? Is it 98% Bitcoin and then some of the other stuff? Like, what do you think that's going to look like?
Well, that's one of the real criticisms that's occurred with the announcement was, and this is very typical in my opinion of Trump. And for the record, as many Canadians who would kill me for saying this, I probably would have voted for him myself, just because of, at least he had an economic agenda and a plan. It's not that I love him as a person, but who he's surrounded himself with and what he's actually attempting to do, to me, makes a lot of sense for an economy that was, I think, going to really, really struggle under the Democrats. But the big criticisms of what was announced was there was no structure around the announcement. So when does it start? What's the size? Is it only going to be a strategic reserve off of legal enforcement activities? The Silk Roads of the world. I think what would be really beneficial is if someone actually put their thinking hat on. Just imagine a world of I don't know, Harry Potter, put the thinking hat on and actually explain what they're going to do. That would be immeasurably beneficial. And then you also had a lot of people came out and said, well, David Sachs actually had to sell all of his Bitcoin, Ethereum. So, David Sachs and Howard Lutnick are theoretically going to be running this strategic reserve. What does it actually mean if they're the ones who are selling? Theoretically, Lutnick's had to sell a lot of his Bitcoin as well. And so you have this, what I would call major announcement without, it's almost like going into Baskin Robbins or any ice cream shop and saying, I want ice cream. And they're like, well, what flavor? And you're just like, well, I want ice cream. No one really understands what that actually meant. Is it 80% Bitcoin, 10, 10, 5, 10, whatever? Is it 70%? And then what's the quantum of what's going to be invested? And I think once we get some color surrounding that, you'll see a very, very large move higher. But regardless, he's already given you, I think there's enough information out there for people to start accumulating, at least the Solana, Cardano, Ethereum, Bitcoin. What have I missed? Solana, Cardano,
Ripple.
XRP.
So this is where my brain goes when I see this stuff, because I think you're kind of on the same. Like, do you think they know? Do you think they've thought this through, or is there some sort of like? Do you think they pushed this announcement out Sunday because the tariff stuff was going to happen the next day, and they're trying to sort of? How much of it is just narrative building, getting certain pockets hyped, excited, versus are they kind of ahead of? They're announcing things and then they're like, okay, we'll figure it out after. Like it's, like I feel like when you're growing up, you assume people, like everyone knows what they're doing. And then, you go to a doctor and you're like, okay, I'm going to look for the diploma now because I've met enough doctors to know. So like, what do you make of all that? How much is it just the marketing of his ideology versus like, is all this stuff happening in the background and they're just like, don't worry about it?
Wow, I can answer that question honestly and maybe get canceled, or I can answer that question politically.
We don't want to cancel anyone on this show, so you can tone it down.
Look, the way I think about what is happening is, and look, I don't have any off switch, so I'll take the risk. I think there's a lot of smoke and mirrors going on right now. I think there's an agenda that is underneath all of this that none of us really truly understand. I think when we were chatting before, I kind of said, look, whatever war we think we're engaging in now, I think it's actually been going on economically for probably a decade, and it's a currency war, it's a gold war, and you had a Democratic Party who I think was just benignly executing without probably more deep state focused and not really actually positioning the US for what is coming, and that is you better have a lot of gold. These currency wars are going to get nasty, and crypto obviously is a major solution to any form of currency war. And you had again a Democratic government who just had their heads in the sand and were like, well, this is really bad for the dollar, but what's really bad for the dollar is printing trillions of dollars on an annual basis, right? And then having to figure out a way to service that debt. That's what's really bad for the dollar, and not crypto. Crypto could be a solution to the dollar's problems. And I think that's where Trump has actually taken an about face and figured it out. So it's a roundabout way of answering and saying, look, I think there is a method to the madness. I don't know if we know exactly what's going on yet. I think it's going to become clearer as time goes on. A lot of people need to remember it's been basically just a month, right? And
I was texting my friends, we're month 3 out of 48.
Yeah.
Like
yeah.
I'm exhausted.
Yeah. Yeah. But it's month 3 of his tenure, but it's like 1 month of actual economic agenda.
Yeah.
It was 2 months of fanfare, and then building what I would consider to be the best surrounding cast of characters I've ever seen. Like, for the first time ever, a government has said, geez, we are a business. Why aren't we running the country like a business? Really, like, imagine yourself, Katie, like, I want to buy 50 Benz or Bentleys, and can you just give me as much money as possible, and I'm going to run $1 trillion deficit for my household? Your bank would laugh you out of the bank. And that's what the US has been doing for a decade now. So finally you have a government who's surrounding itself with business people who are trying to clean house and effectively say, this makes no sense. Like, US aid I mean, there's enough literature already out there to actually show that that was probably one of the biggest wastes of money and perverted financially efforts by the Democratic Party ever. So, yeah, look, to the previous speaker's comments and to sensible investing, find companies that fit the global trend of where you think the world is going. Crypto is one of them. Nuclear, I totally agree with. AI, I totally agree with. AI, ironically, doesn't work without nuclear. So why on earth wouldn't you? Like, I'm actually trying to build a large package of land just with the money I've made in crypto. And it's all nuclear. It's in what's called the Athabasca Basin in Canada. A company called GXP. And I firmly believe that once I actually get a critical mass of land together, Cameco or Denison or someone's going to come in and buy it, because in order for you to run all of these AI protocols, Bitcoin miners are now no longer Bitcoin miners, they're AI and HPC plays. But no one understands that none of it can run without nuclear. So find these major trends, which in my opinion are not that difficult to understand. I mentioned to you that I have a company, and I will tell you what it is. I just want to make sure I get a decent position in it. It's a competitor to Palantir. It's trading at a $50 million market cap in Canada, the land of misfit toys. The minute that company gets uplisted, 100 bagger, 200 bagger, 1,000 bagger, I don't know what it is. So there are really interesting opportunities, and these fall outside of any of the smoke and mirrors that you're seeing from the Trump government right now. I do really believe that this is, you can call it a bully tactic, you can call it posturing, you can call it whatever you want, but the reality is, I do really believe that attacking China for fentanyl is a necessary and beneficial thing. I really do think it's moronic to put a 25% tariff on Canada, which is really just going to hurt the US more than it hurts Canada because of fentanyl, when in reality, the amount of fentanyl that comes through Canada into the US is probably like 1%.
Yeah, I think you got to something interesting in that, you know, there's the worldviews of running the government like a business, running it like a government. Is the goal of the government to maximize profits? That one argument is, yes, that's going to lift everyone up for the greatest goods. But then you also see, when you do come in with that hardcore business mindset, sometimes things break. Tariffs don't work the way they're supposed to. So
Yep.
it is this weird place where it is akin to a business. You're managing a budget, but there's all these human pieces that fall
Yep.
in,
Yep.
and behavioral things. And that's where you start to see some of this confusion happening, whether it's who pays the tariffs, or you know, which things get cut and why, and what's the knock-on impact of that. And it's amazing to just look at this as like a study of the ecosystem of how this all works together. And I do think historically it is a pendulum, right? Like you
Yep.
swing this way, you swing that way. Hopefully, you know, you balance out. But it is a wild time to be a citizen of the world in the United States and Canada.
Well, I told you I had a funny story. I was riding a chairlift skiing, and the guy next to me was on the board of a U.S. steel company, and they were like, "We need to buy everything we can right now. These Canadian assholes, excuse my French, are imposing all these tariffs on us. These are Canadian tariffs. How dare they do this to the United States?" And the Canadian guy sitting next to me, who was on the board with all these Americans, was like, "I don't know if you guys understand that these are U.S. tariffs
Yeah.
that are going to hurt you. And I get it, what you want to do, but don't you dare call these Canadian tariffs." And it's like, it's confusing because a lot of people don't understand how these have been applied, why they're being applied. You know, if I was a betting person, this whole 51st state thing is garbage. Canada has three things which the US wants desperately. They want our water, and no one's talking about water, and you should be. They especially want our oil and gas, and we have a really messed up government where we have refineries on the East Coast and we have oil and gas in the West, and we have no east-west pipeline, and so we have to actually send our oil down to the States to get refined. And that's the leverage that Trump has, and our government, you can call Trump what you want, you can call the Democrats what you want, but I've never seen a worse government in the world than the Canadian government. The Liberals are probably the most moronic entity ever. But you have those two, and then you have a third, which no one is really talking about. We actually have a vast endowment of rare earths and critical elements. And if you look at what's at play, China effectively has a monopoly on rare earths and critical elements. The US has some, but we actually have just massive deposits. And so really, in my opinion, what's going on is a water, oil and gas critical element, 25% tariff. This is what we want. This is how we're going to get it. And you'd better play ball. And then unfortunately, we have this guy called Trudeau who I used to say that Trump made Trudeau look good, but I think Trudeau makes Trump look really good now. He's quite the ineffectual leader, and now we have a guy who's never even lived in Canada, who's probably going to be our next prime minister before the election, called Mark Carney, and he shouldn't even be allowed to be running for election. So it's just a gong show in North America. But again, if you look at the themes, water, energy, whether it's nuclear, oil and gas, critical elements, that's defense, it's everything, cell phones. If I'm Donald Trump and I'm looking at the 51st state, which there's another, I mean, if you want me to digress again, the other really funny thing about...
I'm getting some chats that we are going over, but
Oh,
I'm loving the enthusiasm. I'm loving the reverse patriotism. I think you're right. Things are just weird right now, and.
Yeah.
Guys, do some reading, read some articles,
Yes.
talk to people who disagree with you. Like this is the time to put your critical thinking skills to work and dig in deep. And that's why we love to have you on, Russ, from DeFi Technologies. You always bring such amazing opinions and ideas, and it's great to chat with you today. And I'm sorry we have to run, but thank you so much for coming on today.
There'll be another time. So
okay.
Always a pleasure. Thanks everyone, and good luck investing. It's going to be a wild ride.
Buckle up. You heard it here first. We're going to be back tomorrow morning at 9 a.m. live again for even more insights into what's happening in the markets. Join us then.
Thanks a ton, Katie. Oh, it's